Welcome to the Rebuild Procurement podcast, where we dive deep into topics to keep procurement people up to date and ahead of their peers. First things first, if you're listening or watching, subscribe wherever you're at, whether or not you like this. On today's episode, we are going to touch on news, two specific things, Alan, tariffs and Bitcoin, and then our part two deep dive of DOGE. So there's an op-ed we're going to cover in the Wall Street Journal, and then also been a lot of comparisons to Argentina. So I know a lot of Argentinians and been to Argentina a bunch, so we'll dive into that.
We want to rebuild.
Rebuild it?
It'll take me a month to rebuild it.
Rebuild.
That's how you rebuild, comrade.
I'm Tom Finn, bringing 15 years on the client side procurement, finance, and category management experience in large and small cap orgs.
And I'm Alan Vika, procurement geek on the sell side, the sales side of the street. And I've assembled a team of superhuman procurement professionals doing managed services at a little company we call Summit.
All right. So, Alan, we got a few things we teed up there. The first is tariffs. So I don't know if you saw this or not, but it just got kind of posted everywhere. High level, curious to dig into the substance of it. Haven't totally done that yet, but there was proposed tariffs on day one of the new Trump presidency when he comes into office of 25% on Mexico and 25% on Canada until fentanyl is fixed. There's been just a lot of fentanyl issues within the United States. Very potent drug. Google it. Crazy stuff. And a lot goes through the borders. And then secondarily, there's kind of like this just tax on China of 10% that I saw. So just want to get your take up front. I have but
it's interesting to me because, okay, I can see Mexico. Fentanyl is a real problem there, especially with the porous border. I don't think of Canada as being super porous and sending a lot of fentanyl. So it's interesting that those two get, quote unquote, the same punishment. And China gets the smallest. Now, I think this betrays what this is. This is a power game. Where you have power, you leverage it. That's the way the world works. And so I think with our North America Free Trade Agreement redone in Trump's last administration, this is a finer tuning saying, hey, you guys rely on trade with us more than we rely on trade with you. So Mexico, Canada, spank. It's a bigger spank. But China, they've got some power in that relationship. So 10% seems like it's probably a reasonable start and likely to get bigger depending upon results of it.
Yeah. And one thing that Trump is good at is building just getting the publicity around things. So you mark it up, huge number. Probably on day one wouldn't be that, because at that point there's days that have passed, months that have passed. They've done things to improve. He sees a path forward, and then you say, okay, back down to zero until or wherever they're currently at. But there are a lot of plants.
Maybe it never goes down to zero. Maybe it goes down to 5% or something in reality, right? When you kind of, okay, we're going to put zero on these goods and maybe even higher on these other goods, but across the board, it ends up being smaller than it is. You're right. There's a little bit of the kind of the shock and awe of the initial announcement.
Positioning. Yeah. And there's a lot of, just from a supply chain perspective, a lot of goods, sort of the goods that go into finished product in the United States comes through a lot through Mexico because it's lower cost generally to build certain things down there, but also Canada. I remember when there was going to be a strike on the bridge and truck drivers weren't going to be able to drive across. There was a lot of numbers thrown around, billions of dollars per day. So those billions of dollars become a lot more expensive, 25% more expensive, essentially, if there's tariff placed on them. So yeah, it's a bit of a positioning play. I'm certain of it. It's kind of the game plan. But the administration at least will want its way and to see progress before backing off of it. But
that's right. It's definitely a first 90 days plan, right? I think, already with the cabinet nominees announced, there's been a lot of shock and awe. I think this is the next element of shock and awe. I bet we're We're at step 2 of 10 of that. There's a lot more that's going to happen between now and January 20th.
Yeah, but keep your eyes close on that one. If you have production or suppliers in any of those 3 countries, China's going to matter a lot. A lot of goods flow from China. 10% is quite significant. It's a lot of companies' margin. So yeah,
for sure.
So
That's, and if you've got a good CLM, if you've got a good contracts system, hopefully it's got some AI components. You can do a quick search for Chinese suppliers. What provisions, what clauses do we have in our contracts to protect here? Probably a good time for the 5 that you have, you'll say, okay, we did a good job with those 5. For the 50 that you don't have the right clauses in, time to tune those up.
Yeah, alternative suppliers are difficult to move to as well, so you might end up eating some of those costs. Okay, but folks, keep your eyes on that one. Alan, their second one here, Bitcoin's doing something.
Yeah,
the Bitcoin guy, at least out of us 2.
Bitcoin's doing something. Tom, you were in the pre-show. You were talking Bitcoin's up in the 90s and it was pushing 100. There's actually a fun, if you remember Paul Ehrlichman population bomb, 1960s. There was this big bet that we were going to run out of resources, and Paul Ehrlichman bet. I forget. Simon was the economist's last name, and the economist said, "No, markets will fix the problem. We won't run out of resources." Ehrlichman famously said, "Oh, we're going to run out of resources." The Malthusian, kind of the pessimist. And I just the other day, I saw the check that he wrote for $575 or whatever to Simon when he lost the bet. That with increasing population, we didn't actually, all the prices for all commodities were down relative to where they were years before that. So Bitcoin is kind of this same interesting thing. Everybody has short memory about the productivity of the Bitcoin price. So it raced up almost at $100,000. There's a famous bet on X. That's where I was going with that. There's a famous bet on X where somebody said, I guarantee the price of Bitcoin will be at $100,000 before the end of 2024. And the other guy said, you're on. And they bet 1 Bitcoin. So it's a $100,000 bet. It's not a small bet. So fun to watch that. It toyed with crossing 100,000. It was 99,000 and change. I don't think it quite made it across that. That was this last Sunday night. And it's dropped back down to 92, 93, 94,000 US dollars for 1 Bitcoin. And a person who I was listening to this morning was talking about it, saying, yeah, you guys have very short memory. You forgot that it was only 1 week ago that 92K was the all-time high. And so everybody's worried now that it's dropped from 99 to 92. That's just the volatile nature of Bitcoin. We've got a bunch of traders in there. The saying inside the industry is HODL, H-O-D-L. Somebody, much like the term Doge, when they were meaning spelled dog and they spelled Doge. HODL is the rallying cry of all Bitcoin maxis, people who think Bitcoin's everything. We say to everybody, when you buy a Bitcoin, you never, ever, ever sell it. You HODL, H-O-D-L. Instead of hold, they misspelled it. It's HODL. So it's the rallying cry in the industry.
Those diamond hands, right?
Yeah, it's exactly right. So the drop down to 92 has a bunch of people freaking out. Oh boy, those of us who've seen Bitcoin for some time now have definitely seen wilder swings than this. So it's a little bit of they call it the Thanksgiving effect. This happens right about this time of year. Before end of the year, it tends to go a little bit wilder into the next year. These are all relatively predictable, but increasingly less predictable cycles in what happens to Bitcoin. And I think behind the scenes, it's funny. In the early days of Bitcoin, 2013, 14, when I was watching it, you could see something happen in the news, and then you could see an immediate effect on the price of Bitcoin, positive or negative. And it was like, oh, well, that caused that. And then maybe 3 years later, I started to realize, okay, it's getting a lot fuzzier. There would be news, and you think, oh, it's going to cause the price of Bitcoin to go up, and the price of Bitcoin to go down. You'd say, I wonder why that happened. You'd find out some other correlations or causations that might drive that. And it's it's a funny thing now. You really can't predict, but some of the bigger macro factors that are driving pricing in Bitcoin these days. At the beginning of this year, we had a bunch of approvals of exchange traded funds, ETFs. A bunch of new entrants just got into that business, and they have relatively public and predictable buying cycles, and that drives a lot of what you see happening. So that's one of the macro trends. Another macro trend is we just had a halving, which means the Bitcoin reward was reduced by 50%. So this is the algorithmic.
Algorithmic?
Yeah, algorithmic. Great word. It's the pre-programmed math that says here's how much Bitcoin is going to be released across the course of time. It's what the miners chase after. They solve the math equations. They find the Bitcoin. They get to keep the Bitcoin. That has been reduced by half this year as well. So the macro trend is there's just a decreased supply. That when there's a decreased supply, there tends to be and no reduction in demand or an increase in demand. There tends to be a raising in price. So that's what you're seeing happen here. A lot of people say this is inevitable. Some people say no. This is this is a bubble, and it too will burst. We'll find out who's right. It's kind of fun. So that's a macro trend: is this halving of the Bitcoin reward? But then something else that I think is really interesting, just within the last couple of weeks, some of the pioneers in the Bitcoin industry took Bitcoin into their companies and said, "We don't want to hold our treasury, our cash in dollars because that's inflating away. We want to hold our treasury in Bitcoin." And there are a couple of companies that will allow you to do this. They'll help you secure it and manage that transition into turning your dollar denominated treasury and corporate treasury into Bitcoin denominated corporate treasury. And you're starting to see an increase in this happening, and you're starting to see an increase in people talking about it happening. So just this week, there was the release of 5 names of companies that had done this. Probably the most well-known of those companies is Rumble, which is a YouTube competitor. Hopefully we don't get blacklisted, censored for mentioning a competitor of YouTube. We'll find out. And so they went out and bought a bunch of Bitcoin. Yeah. They went out and they went out and bought a bunch of Bitcoin and turned their corporate treasury into Bitcoin. So I think this is going to be an increasing trend. It doesn't take much. That's a pretty big mega influence on the price of Bitcoin, and I think you're going to see that play out across the course of 2025 and beyond.
Yeah, the corporate treasury stuff. I mean, generally companies hold corporate treasury because it's kind of like as safe as it gets, like relatively speaking. Of course, obviously the Bitcoin folks would disagree. You inflate away the value over time because treasuries don't pay to the extent that inflation is going up. So you're losing money every year. But there's still volatility, or at least I would view there being volatility if it went from if you had $100 million in cash that's sitting with Bitcoin and it goes from 99 to 92, you lost that money. Versus treasuries kind of like just over time lose money via inflation. But the idea is you shouldn't always hold on to that cash all the time. You should be reinvesting in the business, things of that nature. So, I mean, what's the idea for putting your, like, it almost feels like it'd be better just to place it in the S&P than it would be to Bitcoin. But
there's undoubtedly a movement to put something like that in the S&P so it doesn't lose as much value. It's all tied into, and perhaps next week I'll bring the charts and graphs that show the highest performing assets across the course of the last decade. And Bitcoin reigns supreme in
let's
all
do
of
5 years. Let's do 5 years.
Oh, we do 5 years. I thought you were going to ask for a century. Because otherwise, then the U.S. dollar guys and the gold guys get the happiest, right? They're like, "Oh, certainly." Look at mine. Yeah. But certainly across the course of the last 10 years, and Bitcoin's only been around for about 15 or 16 years now, so it doesn't have that much track record. So there's an argument that it's the highest performing asset. But there's certainly a much bigger argument that it is the most fungible form of wealth. In other words, it's not physical. You don't have to hold it, don't have to carry it, don't have to transport it any place. You can turn it into any other currency 24/7 on a number of well-respected marketplaces. There's a bunch of reasons why it's better than gold, it's better than S&P, it's better than dollars. That's number one. Number two, interestingly, is Bitcoin was born in 2009 specifically to fight inflation. So everybody likes to think, oh, inflation. Yeah, that was something that kind of came in 2020, 2021, 2022. Does everyone realize that those money printers are still going, they are still printing money today, gobs and gobs of money. We are not done inflating. The M3, the money supply is increasing dramatically. And Bitcoin, because of its scarce nature, is meant to fight that. So when you see the value of Bitcoin against the dollar, it's actually even a bigger a better asset because the dollar has been inflating away. Call it slightly. What did we see? We saw 8% inflation, 9% inflation according to those metrics earlier this year and last year and the year before last. So it is a hedge against that inflation. Your dollars are becoming worth less. So if you denominate your treasury in dollars, your treasury is worth less.
Yeah, I think and we could probably go back and forth on Bitcoin all day, but there's the idea that money is directly then going into Bitcoin and the S&P too, right? Like that's driving what the value of assets in general are, because even the S&P is scarce assets. There's only so many shares of companies that get issued for debt sometimes, but generally speaking, a lot of folks just like status quo.
But keep in mind, Bitcoin, same way, scarce. There are only 21 million ever. And probably something like 20%, 10 to 20% of that's been lost across the course of time. So it's just gone. So it's something in the neighborhood of 17, 18 million Bitcoin out there.
Yeah. But it is interesting if folks are going to treasuries, switching away from treasuries.
Yeah.
And then maybe just to switch into a bit of our deep dive, Alan, zero transition there. But so we're going back to DOGE here to chat a little bit about this. Did you check out the Wall Street
Governmental
Journal?
Efficiency? Because there are
Department
lots
of
of
Government
Doges
Efficiency. Yeah, maybe that was the transition, right? Speak of another, the Dogecoin. But yeah, the Department of Government Efficiency kind of kicked things off. Did you see this Wall Street Journal article with
I did.
Musk and
Elon? Yeah, Elon and Vivek. Yes,
Yeah.
it caused quite the stir. I even read it and enjoyed reading it. And maybe we'll go into a lot of different directions with this discussion about Doge, but I'll put my cards on the table. While I stand and applaud the efforts to drive efficiencies into the U.S. government, I mark myself as a skeptic. I'm not going to say a pessimist. I'm optimistic in the long run, but I'm a skeptic about the ability to actually drive any true meaningful change in the size of our government. And I'll even go deeper on that as we dig into this topic a bit more. I've got some other reasoning behind it, but I just think that there's probably no one better positioned or stronger than Musk and Ramaswamy to give this a try. But I predict they're going to fail miserably, no matter what the marketing might say. The marketing might say this was wildly successful, but you see in that article in the Wall Street Journal, they've already given themselves kind of an out, a sunset. They're sunsetting 4th of July, 2026. So this is an 18-month project, and I think they did that on purpose, because if they didn't set an end date, then, when do you quit? If you're not successful, you never quit. So I think they kind of said, regardless of what happens, we're quitting July 4th, 2026.
Yeah. And it sounds like I'm going to be optimistic. I'm taking the other side of the coin there, because I think there's just so much waste currently with just the way things are, that there's just like, we call it like the low hanging fruit, right? Like the easy things to do. I think they're going to find low hanging fruit that's like a lot of money. It's not going to be 2 trillion necessarily. So by being unsuccessful, maybe if success is measured to, will we have a surplus, we may fail that. But I think there has to be get some traction towards the American people wanting a, generally speaking, better run country from a fiscal standpoint. Because we do a lot of things right, but we blow a lot of money. Again, if you're bringing in so many dollars and you're spending like essentially the same, like double that, come on. Like no one runs their checkbooks like that. If you do, you're going on a TV show to show how poorly you are running things.
I agree. So our to make this real, Tom, next week on this very program, this program,
it's exceptional.
We will come. You and I will come with 2 numbers that define whether the pessimist wins, moi, or the optimist wins, you. It will be number of jobs eliminated and or number of dollars saved. We have to come with those 2 numbers, and that'll be the dividing line. If it's above that number, if it's over, you win. If it's under, I win. What do you say? We'll put a little totally $5 wager on it.
Totally down. And then time period comes into play too.
2026. July 4th, 2026 is going to be our dividing line.
All right. It's the same day as July 4th, 2026. Mm-hmm. I'm down. I'm going to win, Alan.
Oh, I don't know. I don't lose
I don't
often,
know.
Tommy.
Is ever the best thing to bet against the U.S. government spending more? If we look at the chart, I was looking at the chart. It's pretty wild. We'll bring some of that
Yes,
stuff
it
maybe
is.
just to show what we mean. Like, because I think some of this could come across as critical or one-sided, but it's really not. It's really just like math that ends up ticking me off. When you get like a good data set in front of you, you're like, ooh.
Oh yeah.
I think we bring a data set and like maybe a version of a financial statement for the U.S. government.
That's right.
But just to maybe summarize the article, and then we'll go into the bit of this Argentina comparison, which I don't think is the best comparison, but currently what they're doing is interesting. And I'll go through a little history of Argentina to explain why it's not a good comparison. But just on the article to summarize, basically the four things they're looking to do, this being Vivek and Elon, are regulatory rollbacks. So making things, there's a lot of stuff that departments do within the government that are supposed to have congressional approval that don't, that maybe we've considered regulation, but when you actually go to, is it yes or no? It's actually not. So they're going to attempt to roll back some of that. That's going to get pushed back for certain. Federal workforce reductions. I talked to some Argentines about what they're actually doing in Argentina. I think it'll be helpful for that piece. Cost savings, waste reduction, what we're talking about here, how things are done, how money's spent, and then civil service reforms. So use of executive authority to relocate agencies, kind of overall, like maybe bring some together, things of that nature. So that's just a summary of what they're looking to do from their op-ed that they wrote. But you go down, if I jump into a little bit of this Argentina background, just to tee up where they're at with Melee. So essentially, Argentina used to be one of the wealthiest countries in the world, early 1900s. And they went through just like total disruption amongst themselves. And now they, as of like last year, their inflation was just enormous, which had been worse before. Just the quick summary of Argentina, it was very prosperous. They're very much, even to today, very much a commodity focused country. So they have a lot of call it like beef and a lot of like harvest, will be sent from
Wine.
Argentina. Wine. Yeah, whenever I would go down there, that's what I was bringing back. So there's the wines. They have a lot of oil and gas, a lot of mining. So they're a very rich country just when it comes to the assets that they have, but they were never really able to bring about that next step processing, right? You have the lithium, but you can't make the batteries. You have, I can maybe accept wine, right? They have the grapes to make the wine, but a lot of things they weren't able to bring it to that next step or second step. So when the Great Depression hit for the U.S., the 1930s, 1929, totally ruined them because the world was unable to buy their stuff. They were commodity focused. If your commodities are high and it tanks, you've seen it happen with in Venezuela. Life's good when oil's high, then it drops and life's bad. It hit them very hard. They turned much more socialist. They had this gentleman Perón that came in that became let's have the government just take over everything. The airline industry over time, all the resources end up being government owned. And when you do that, there's no private investment. So you kind of have to continue to subsidize that internally. The thought is then we could sell that, but things end up being, it's just shown things are worse, not run as well. Just you end up having this nanny state, a lot of folks will call it, where people are then dependent on the government, even if you're working for an oil and gas company, where in many other countries that's private. So you end up turning into a nanny state. Then with that, they had coups, Perón was thrown out. He ended up coming back later.
I thought it was interesting. Yeah, of course, there's always a comeback. Empire Strikes Back. I thought it was interesting in doing the research on this that Perón was called a populist. There was a lot of poverty in the country, so the people backed this, and in theory, you would say backed kind of this approach to government. Very different. Trump is being labeled a populist, but I certainly don't envision Trump nationalizing anything. It's a different approach. So the populist label, as with all labels, is problematic.
Yeah, for sure. Yeah, and it was more. I mean, they went with the communist type approach, and it was a lot of military focused. And then what happened in the later part, like 1990s. Then, I mean, they had horrible inflation. The early 2000s, they had to default on like 100 whatever billion dollars. I should know that the U.S. government having the trillions now, it throws me off all the time with what, but they were getting a lot of investment from the IMF. They couldn't pay it back. So it was all these issues in the early 2000s. And then most recently, they had what was going towards hyperinflation. So I think at the top, they hit like 25% per month, right? Which, like, add that out. They were like 250% run rate for the year on inflation. So if you're losing 60% of your money every year, I mean, what does that do to poverty? They're already 50% poverty, below the poverty line. And then those folks, they end up having the little money they have is worth way less. So this is where melee comes into play.
That's where when we're talking about inflation and why inflation is so dangerous and why our own Fed really works hard to try to keep inflation under wraps, is because it is the wealth destroyer, but more importantly, it is the poverty creator. So those who are impoverished in lower socioeconomic stratum, they are the ones who get hurt the worst because they can't possibly get enough cash to make up for it. The cycle of raising of salaries never matches what is destroyed on the pricing side. So it's terrible bad news for the poor.
Yeah, I was going down there. I think I started in like 2018, 2019, before it got really bad. It was like 40-1, like 40 pesos to $1. And I was getting pesos out at the ATM, and people are like, "Don't get too much, Tom." I'm like, what are you talking about, guys? Because I have the American mindset of like 3% per year, right? We were on 3% per year for a while before that.
Boy.
Irregardless of the amount of money that was being printed, right? We had a very low inflation rate, and I got it out. I remember the next time I went, it was like worth half the amount. So I was like, what the heck? Like, yeah, it's tough down here. Like, don't bet. And that's the internal feeling amongst the Argentines. Like, be careful, because inflation is, ruined different generations in different ways. But this is then what tees up Melee. He's this guy coming in. He's what do they call him? Like El Loco Melee.
Chainsaw.
Yeah, they call him like the crazy Melee.
Yeah, and he is. He comes across as larger than life, a bit crazy.
Fantastic sideburns, right?
Oh gosh, crazy hair, wild and crazy hair. I mean, it seems like that is the currency of the politicians of our day, between Boris Johnson, Donald Trump, and Javier Milei. It's you got to have the crazy hair. So I don't think I'm in, Tom. I think you're out. Like, we don't have careers.
Like, as little crazy as possible on my side. But yeah, I mean, there was a great it was like entertaining video of him as he was running, and he's kind of guy. He's like a fiery guy, gets worked up easily, and he had about the different departments. There was 18 within Argentina, and he had on a whiteboard the different names. He was like just pulling them off and throwing them away. So he's an intense character. Gone. He throws him over his shoulder. It was a very entertaining video. But
but interestingly, you sent me a document that I hadn't seen before. Yes, he threw these various departments off the board, but in essence, none of them went away. They were just combined with other agencies. So there was a reduction by 50%, but not actually a reduction, just a recombination.
Yeah, I think they got rid of one. And yeah, I went into it was the Cato Institute. So they're quite a conservative bunch that likes to review that kind of stuff. And I built that, Alan, from that doc. We can maybe share it in the notes. But essentially, yeah, they retained a certain number, but like the Ministry of Transportation that they had, they rolled it into the Ministry of Infrastructure. And then like the Ministry of Education, they rolled it in. They had, I don't know if they built one, or like the Ministry of Human Capital is what they called it. But then they got rid of, I think, just one, at least per that writing. So it wasn't necessarily that things go away. Like, if activities are important, they then get brought under an umbrella that's then, for them, hopefully better managed.
Hopefully better. Yeah. Under, so there's half of the administrative burden of each one of those of each one of those departments, special departments. But just to put it in perspective, while they reduced the names of departments by 50% and only reduced one actual, kind of threw away one department. These are some fun stats. I didn't see these in the ones you'd collected, Tom, but to put it in perspective, they have 3.5 million government employees in Argentina. 3.5 million. To put that in perspective, they have 47 million total citizens in their population. The U.S. has about the same number of government employees for 10 times the population, for 350 million, almost 10 times the population. So we are starting from, to your point earlier, we're starting from a much more efficient place than Argentina is. So the comparison might not be exact, but to put this in perspective, while they reduced the names of the number of government departments by 50%, the total number of employees that have left the government or been asked to leave the government is, depending upon the news source that you read, it's somewhere between 50,000 or 120,000 employees. It's still early days, which really only amounts to 1% or a couple percent of the total government employee count. So it's tiny, right? 50% reduction in the names of departments, but 1 or 2% reduction in the number of employees. This is why I think that it's kind of peanuts, right?
Yeah. I mean, Wikipedia, which isn't always, sometimes could be fantastic, sometimes could be ChatGPT, and it's just a hallucinating person writing it. But the public sector layoffs, they had in there, they wrote approximately 20% of federal employees were laid off. What I was told, so I reached out to a few folks, they're not necessarily, like, the first step that they've gone through was it was laying off contractors. So people that were just on, they were not necessarily government employees per se.
Right.
They're paid by the government, but not directly. They're not direct employees. And the main focus of that, the term that was used was people that are called ñakis. And I was like the potato pasta. He was like, yeah, that's the name. So it's people that, like, they were being paid. Yeah, they're exactly ñakis. I'm sure I'm pronouncing that wrong. Probably like half the words I'm saying on this. But they were being paid, but they weren't working, right? So they were just like kind of ghost employees. So they went through, reviewed those ñakis, found those ñakis, and and they those were the first to go from a government employee standpoint. So yeah, I don't know if they've made.
I can take the Italian pronunciations. I took 2 years of Italian in college, and it's my favorite language, probably my favorite country. Gnocchi. I think it's a small number of actual employees that's been affected. Yet, like you said, contractors initially. But I did read a stat that said, obviously, much like maybe the tariffs against China being smaller than we anticipate Trump eventually getting to, the initial number of bills that Milei's administration put through Congress, their version of the legislature, was 600 bills. Only 232 were passed. They had to scale back because they are the minority in their legislature, so they don't have control.
Yeah, they haven't been reducing. They made a big pitch on just reduction in spending overall, which they have done, but they haven't touched the federal, like, subsidies for folks, because again, they're 50% poverty, like thereabouts. They, as I'm told, right, by sources local to Argentina, but not officials, but they haven't really been touching those programs because they still need to support people. I mean, people need food, but what they have done, that 25% per month mark of inflation, that's 2.7 per month now, last month. How crazy is that? Crazy is that? That's unbelievable. Yeah. So the things are working there, but again, it is different. Just to our earlier, where we'll come back and see who wins this optimist versus pessimist. Can the U.S. do a similar thing? We're at a different starting point, which I'll totally acknowledge. In that the U.S.,
which is why I think the pessimist should be very positive about winning, because our condition, we are not the sickest person in this hospital by far, and the low hanging fruit, there's less low hanging fruit, Tom.
Yeah, I'm gonna from a maybe, but when it comes to, I didn't put this in our doc, but we could share this too. I was curious, maybe I did put it in, but from a debt to GDP, Alan, we're getting kind of sick when you look at it.
We're in the hospital. Let's be clear. We're not the
Yeah,
sickest
I
one in the
mean,
hospital, but we're in the hospital.
like, because we spend a lot of money too. So like from a debt to GDP standpoint, and again, if we're paying high interest rates, it just gets worse. But we're at 122 debt, higher number, GDP lower number. So we're spending more, like above our GDP, or at least our debt. I'm sorry, let me rephrase that. Our debt is above the amount that we have for GDP. And Argentina was, so I said 122. They were at 155. And theirs was going outrageously fast. This is all from the end of 2023, so December 2023. They were at 84, and then they shot up to 155. So some would say maybe they were managing themselves better before than the U.S. But countries that you look at that you would be surprised were kind of like Cuba's 119, right? I mean, France is 111. So Spain 108. We're above those countries on our debt to GDP.
Yeah, but it's interesting, and I think I heard the stat. So debt obviously is how much you owe. GDP is how much you kind of quote unquote make. That's your salary, right? Debt is how much you owe. What we're actually paying to the banks to finance our debt just rose above 50% of our budget.
Okay. All right. So
I think you can wrap it just by saying, so in short, right? The U.S. economy is not Argentina, but it's not far behind.
Yeah. Okay. And then I do want to make one comment. Do you have one more minute here, Alan?
Yeah, of course.
Just around the difference in policies, right? Okay. I mean, we're not necessarily Argentina, and the starting point again is so much. It is so much different. Given if we fast forward right where we are today, the U.S. has this high debt to GDP. That's kind of what a lot of folks are worried about. And there's high payments, like you're saying, Alan, with that 50% mark, which is crazy. It feels crazy as just like a homeowner, right? Or even a renter. That's just crazy for that much money to go out the door to your interest payments. But that's where we're starting. Argentina, horrible inflation. Folks are down there losing money. There was lack of investment in the country. So what they voted on was something in that they needed someone just to help fix it. And to take them from, call it like starting point of zero, to just make us better, marginally, if not much more. If the US stays on its current trajectory, I think a lot of folks would say like, yeah, 30 years, still be fine. But after that 30 years, maybe not. If you continue on the trajectory, it's not going to be so good. So ours is more forward looking in that can adjustments happen now so that from 30 years from now, we're still in a good financial position versus rest of world. So that will also then roll into how much folks have the ability to cut. As I argue for your point on pessimism, I think is how much can the U.S. population be pitched that we have to do something now for the future.
Yeah, I'm always a big believer in the fact that people run into walls. People don't course correct. They run into walls. They're like, oh, there's a wall there. Oh, now I'm going to turn.
I don't know. I think Elon Musk is the biggest type A person in the whole entire world. So there's been a brick wall or two that guy's run through.
For sure. Yeah. We'll see. It's going to be fun to watch. That's all I can tell you. I like to tell everybody, as taxpayers, we bought the tickets to this performance. Sit back in your chair and enjoy the show.
For certain. Yeah. So how this all ties together for folks. I think we'll come up with a predictions episode too, maybe for next year, Alan, this aside. But my expectation, I'll give a little teaser to my big one for next year, is that efficiency within organizations is going to get a lot more focus next year. I think folks are going to be hearing about it.
Right?
Huh?
On the IT, on the tech side, like the West Coast, where most of our tech companies live, and where your company lives, there's been a big focus on reducing headcount. I know a lot of people who worked in the industry who don't work in the industry anymore.
It'll be AI, but it'll also just be internal processes. I think is going to be like how are we doing that? I think that's going to be a big question for 2025, and challenging the status quo.
Yeah, and maybe it's an interesting question, maybe for the next podcast. What is the difference between process and regulation? Right? Because a part of what Milei did in Argentina, part of what Musk and Ramaswamy are talking about doing in the U.S. government is, and Trump's talking about doing, are decreasing the number of regulations. Is that equivalent to saying decrease the number of mandatory processes? I don't know.
I mean, a regulation equals more processy.
It does, for sure.
Yeah.
So it's put a pin in it. We'll come back to it.
Sounds good. All right, Alan.
All right.
That's it.
Well, maybe
That's the
I'll
pod.
try it. Maybe I'll try a wrap. You can't spell finance without Finn. So on behalf of Tom Finn and the sales superstar Alan Veek, we want to say thank you for listening. Like and subscribe. Like and subscribe. Bye bye.
Bye bye.
We want to rebuild.
Rebuild it.
It'll take me a month to rebuild it.
Rebuild.
That's how you rebuild, comrade. Show me, and you won't hear the word rebuild.
Rebuild.